So this is what I do, and this is actually, I'll start right from the beginning. First, with the indicators, I stay very, very skimpy. Now, if you've noticed, I've really liked to to be dabbling in the options market recently, and if you notice a common theme with every one of my option trades that I recommend, it has something to do with volatility. Either volatility is high, which means I want to sell options, or it's low, which means I want to buy options. So, the first thing that I do, and actually let's just go to the S&P 500 since we're all familiar with that, and of course I have my drawings on it. I'll go like to the 1-year chart or maybe the 9-month chart, and I'll just have the stock, I'll have the volume, and then just for good measure, I'll put on the slow stochastic indicator, which is a momentum indicator that I've just found like totally empirical. I've found that it tends to be right, and also I've done a lot of my own research on it, so I know how to use it further than just the simple buy and sell signals. Like there are actual stochastic patterns. If you actually if you're actually looking for something to read, the inventor of the stochastic indicator, George Lane, he actually put out a lot of very informative, very useful books. And I would suggest one of those to further your own learning. So first, this is what I would do. I would go through my stock list, and just for time's sake, I'll just go to the sidebar where Thinkorswim tells me stocks that might be forming patterns, and I'll go through them all, and I'll be looking mostly, I'll be looking here, the volatility, and I'll be looking up here, the price action of the last 3 months, or maybe 6 months sometimes. And I'll keep going through, and maybe I'll come across over here and I'll say, alright, so what do we have going on right here? We have pretty much average volatility, and we have the price action, and today we might have had a small bottoming pattern. And I could also do what I do best, and I could draw a bunch of lines across everything. I could say, okay, so that was about the same level as that resistance level. There's a weak trend line that's coming up this way, and also maybe just to clear things up, and I won't use this for trading signals, just as support and resistance. I'll say, okay, let's get some moving averages in there. I'll add the 20 to show me the short-term trend. That one usually is insignificant as a support or resistance level. I'll add the 50-day moving average to show the intermediate term trend. And then finally, the big one, I'll put in for the 200-day moving average, and I'll always make that one very bold compared to the other two. So we got my moving averages, and I can say right now then, okay, so we have a small bottoming pattern that's bouncing right off of the 50-day moving average, and just today the 20-day moving average just crossed above oh, hold on, I didn't change the 30 to the 200 yet. There we go, much better. Okay, never mind. I thought that we had a moving average crossover. But the next thing that we'd want to look for is maybe a crossover of the 20 above the 50, even though I usually don't take those signals. Okay, so I'd look at that and I'd say, alright, so I want to trade this stock somehow. Then I will switch my study set to the one that I call the divergence set. And that is composed of, and you might need to view this in HD, it is composed of the moving averages, the 200, the 50, and the 30. The slow stochastic, I use a 10-10 for each period for the K and the D. Those are just the different lines. So that one's giving me That one's giving me basically like an intermediate term average. And then I will use the relative strength index. I will use 7 days. The intermediate term one is normally 14, but I prefer to use 7 because, well, here, let's get rid of a couple of these so we can actually see what I'm talking about a little more. Here, look in this area. I go to the 14, and it looks like that, and I could do some analysis on it. Like I could say, we might be able to draw a trend line like right there, say that that was a topping pattern, but sometimes I think it's too smooth, especially in non-volatile stocks. So I'll go to the 7 and I'll say, okay, that's what I like to see. Now I can actually draw maybe some pattern formations. Like I can say, we had a small breakdown today, which might be bearish in the future. And sometimes I can say that there's like a symmetrical triangle pattern. So that would just be an example. So I'll bring up my study set again. The first one we have the slow stochastic, which like I told you was the momentum index, relative strength, which I use for a short-term analysis, and then finally the very bottom one I use it's called the Chaikin money flow, and I like to use the 21-day period, which will give me a little bit of a longer term view of everything. And now, just not to clutter up my screen, I'll always leave out the last one. Finally, I'll put in the general momentum, and I'll just clear everything out to clear up the screen. But summary, I use the 7-day relative strength index, the 21-day Chaikin money flow, and I use the money flow index strictly for divergence analysis. So say, I'll pull that one up again. Say the stock is making new highs and the money flow index is declining. That usually means that the market's going to go down. Conversely, the money flow index is going up. Actually, there we go. Money flow index is going up, but the stock market's declining. Who knows? Maybe it's bullish then. So finally, I'll just put up the standard momentum index. The default is 12 days. I changed this one for very short term, so I only do the 5-day momentum. And this one, it all depends what stock you're using because it can look really erratic. Like, see if I can come out with any analysis from this one. You could say that you have a really sloppy symmetrical triangle, like right here, that broke out to the upside. And at that same time, the market started climbing too. Gave actually a bit of a leading signal to the upswing, but that one, it all depends on like how choppy the market is. If it's unreadable, like this index down here, then just change the entire, change the period to make it a little longer just to smooth it out a little more. Okay, so that's what I basically do. Like I said, I'll write this down, bring up my handy dandy WordPad. Okay, in summary, 7-day relative strength index. I use the I use the 21-day money flow index, 5-day momentum, and finally the 10-day slow stochastic. If you have any questions, like post in the comment box, of course, but it all depends on like who the person that's trading is, what their time frame is. Somebody that, like my partner Mike, who is usually in a longer term time frame, he might go and just double these since he doesn't like to handle the stress of short-term trading, but it's all the individual trader's preference. Alright, thanks for watching. Post any questions in the comment box.